Now in dollars and cents, the cost of homeowners insurance is soaring, forcing millions of homeowners to cut back on their coverage or go without putting their most valuable financial assets at risk.
We are asking, why is this happening and how you can lower your premiums. Consumerman Herb Weisbaum, a contributing editor at checkbook.org, has been investigating. He's here to share what he found. What did you find?
Well, we found what I think every homeowner knows, that insurance policies have been soaring for the past couple of years. The numbers, though, show that they've been going up way higher than the annual rate of inflation. Take a look at these numbers. First of all, this is government data. It shows that between 2021 and 2024, overall inflation rose 11%, but the average homeowner's insurance policy shot up by 24%. And let's put that into dollars and cents for you. According to a recent survey by the Consumer Federation of America, the average annual premium for a homeowner with mid-range credit and a $350,000 replacement value policy last year, $3,300. Now, the industry attributes these sky-high price hikes to things like climate change-related disasters, all the storms and the wildfires we've been having. Materials cost more, labor costs more. There've been lawsuits filed against them. So they say they have to raise the rates in order to pay out the claims. But consumer advocates that Checkbook spoke to say corporate greed has a lot to do with this, and they accuse the industry of taking advantage of climate change in order to boost these rates well above where they need to be.
A lot of layers to this. So consumer groups also blame the lack of regulation in many states for sizable rate hikes. Is that a problem here in Washington state?
We're lucky it's not. In some states, believe it or not, they just file whatever rate they want to do when the premium policy comes up, and the state doesn't even look at it. In some states, they file it, and the state looks at it and says that after the fact. But in our state, they have to file it before the rate hikes go in, and the state insurance commissioner's office takes a look at it, and they can say, it doesn't seem right. We got to rework these numbers. So we're lucky to be in a state where there's basically like prior approval necessary before they can put in their rate hikes for the year.
And as you noted in your Checkbook story, consumer groups are shining the light on another troubling trend: insurance companies lowballing payouts. Tell us what you found there.
Yeah, it's a troubling trend. It's happening with wildfire victims. It's happening with storm victims in the middle of the country, in the East Coast, when there's hailstorms or windstorms, hurricanes, that sort of thing, paying way less than what the people believe they are owed. For the Consumerpedia podcast that I just dropped yesterday, I do for Checkbook, I spoke to a wildfire victim down in the LA area. Their house, they were lucky, their house was not destroyed, but it was filled with toxic smoke. Well, they had an independent expert come in and were told it would cost $300,000 to clean up the house. They could not move back in again because that smoke left toxic materials behind, like lead and mercury and zinc, things you do not want to have in your house. So their insurance company, State Farm, said, no, this is just minor smoke damage. You can just clean it with, some wet rags and maybe vacuum it up or whatever. So the $300,000 estimate to clean it up, State Farm settled the claim for $70,000. These people have not been living in their house since the wildfire. They have no idea when they can get back in again. They're still paying the mortgage and the taxes, and they're living with their son right now. Checkbook contacted State Farm several times and asked them about this, but we never heard back from them.
My goodness.
Gosh.
All right. Hopefully no one watching will find themselves in that kind of situation. We do need to know how to deal with rising premium prices. What do you suggest?
Checkbook's #1 suggestion based on years of price shopping is, if you want to substantially reduce your insurance premiums, shop around. We used to say every few years. You may want to do it every year because that is going to help you lower those premiums. And I actually shopped around, and last year my insurance broker, my insurance agent, found me a policy for home and car insurance that was $1,000 less than what I paid the year before, and it was better coverage. So that's really important to shop around if you want to significantly lower your payments. We found here in the Seattle area, you can save between $500 and $1,500 by shopping around. The other things that you see on your list that you could do are raise your deductible. You could save up to 12% a year if you went from a $1,000 deductible to $2,500 deductible. That's according to an analysis by NerdWallet. Bundle your policies. Most insurance companies will give you a small discount, 5 to 10% for having your home or auto or one other policy with them. And then ask about any other kind of discounts. AARP members. I'm a non-smoker. I have security devices in my house. I have smoke alarms that are wired to the central station. Paperless billing may save you some money. But the big one, if you really want to save money, is shopping around for a new policy. They'll tell you they're giving you a loyalty discount because you've been with them for so long. That loyalty discount is nowhere near what you would save if you shopped around the policy. So do that, and you may be surprised at how much you could save.
And can you do this comparison shopping online, or should you use the independent insurance agent?
It's really easy to do it online with some of the really good websites, so there's no reason why you couldn't. But I use an independent broker, an agent, different than broker, an agent. I don't pay anything. They get a commission just like when you use a travel agent. And they also know all these nuances, ins and outs, or maybe regional carriers that have better coverage in your specific area or whatever, like here in the Northwest because of the wildfire risk or whatever. The other thing is they're also there to help you, Holly, if there's a problem after the fact. Years ago, during one of our big storms, we had a giant tree outside the house fall on our car in the driveway, and I called the company up to say I can't get the car to the insurance adjuster until we get the tree off the car. And the person answering the 800 number said, Mr. Weisbaum, you know, we don't take care of shrubbery with your policy. It's like, no, this is not shrubbery. This is the gigantic tree that's on my car. Well, she wouldn't budge. I called the agent, and he said, yeah, like, it's taken care of, and don't worry about it. So you have somebody in your corner, which is really nice. And again, I didn't have to do any work, and my guy found 2 policies. We saved $1,000 without batting an eyelash and got better coverage. So that worked out really, really well.
Sounds like the best option. So Herb, how do we find out more?
Well, you can read the article. It just dropped yesterday on checkbook.org, and there's also a brand new Consumerpedia podcast. You can listen to this, and you can also hear more from that victim at the wildfire. She had a great quote. She said, I've been paying my insurance premiums for 30 years, never had a claim. State Farm says they're like a good neighbor. What kind of neighbor are they really? She had a powerful story to tell about her situation, and she's clearly not alone.
Wow. That is frustrating. Herb, thank you so much.
See you next week.
See ya. Yeah, I do feel like with this, you want the expert, right? With that independent insurance agent, because you can do all the research and everything, but when it comes down to it, this is what they do.
Yeah, all about staying protected.
Yeah.